So if retail traders are so bad at trading, is it possible to look at how they're trading so we can trade against them? Should we be on the other side of retail traders, basically is the question. But also, how do you find out what they're doing? Well, firstly, you can see what they're doing by a number of ways. Firstly, look at any market that is being sold off, such as the Aussie dollar here, and then use a tool that is provided free of charge by FX SSI. So if you go to fxssi.com/tools, in tools here there's a number of different tools you can use, and some of them are free, some of them are delayed, but you can pay for the tools on here as well. There's no real need, but sorry, take the adverts off. But so what you got here is a tool which shows you by broker type or broker what their current holdings are of any particular currency. So you can see here with the euro dollar, it's looking at all the different brokers, and I say all different brokers, but groups of brokers, FX Blue, etc. These are groups, not actually brokers. They're just groups. Then you've got the sort of big retail brokers such as IG, Dukas Copy, Oanda, Saxo, Insta, and FX SSI's own figures on these. So they will give you sort of a clue of where traders are sitting in terms of their selling position, what they've sold and what they've bought. So at the moment there's on average here you can see that 60% of retail traders are holding long positions as against 40% which are in short positions on there. So there's no real extreme there. Is that going to help you? Not really. But I mentioned the Aussie dollar, so if we go to the Aussie dollar, all of a sudden you start seeing some extremes. The very fact it's over 75 on a lot of these here, and it's in the world of 80, suggests to me that retail traders, they're buying their holdings here, net long versus the short. So 75-25. Let's go back, look at that chart. What's it doing? It's selling off. So in this particular case, it gives us a bit of a clue with what's going on here, and it shows us that retail traders, regardless of what's happening here, they just want to be buying this market. It doesn't matter how much more it's going down. Now this isn't just a blip of this buying. They've been long on the Aussie for a long time. If you watch my morning outlooks, you'll see that I sort of rant and rave about it at times. The very fact that they're trading against the trend in the first place, trying to catch the bottoms. But this trend is so strong, and it's not like it's a straight down trend and a bit of a bounce here. These are opportunities to sell. Now when I say to sell against the retail traders, we still look for value. We don't just sell willy-nilly. We wait for retracement. So retracement back to the weekly pivot last week there on the 4 hours here may have given us an opportunity to sell off. If you trade using moving averages, you might find some decent retracements to moving averages. Just because the retail traders are actually negative on a market, positive on a market that's negative, I should say in this case, because they're buying the Aussie dollar against the US, it doesn't mean to say that you just, as I say, just jump aboard here. You just wait for your turn and get in there and get some value out of the market. Chances are retracements will be met with further downside. Now if you want some further sort of backing of my statement in terms of looking at such things like the Aussie dollar, you can go and look at the commitment of traders. It's another report I look at regularly and seeing what they do. Now the commitment of traders is taken on the big traders, what they're doing. So we're looking at the institutional traders, so we can go and have a look on FX. I use Tradingster.com. There's a whole video about using this within my videos. I'll link it so you can actually see it. But this is the Aussie dollar, for example. I pulled up, here's one I did earlier. But just look at the positions. All I'm looking at is asset money, manager stroke institutional money, and where that's sitting. And look at the short positions versus the long. Look, they're the complete opposite way around. They're shorting, and the change this week, over the past week, has been another 11,000 contracts short, and they're reducing their long positions. Who do you think is going to be right? The guys that are losing 80% of the time roughly in the retail market, or these guys here? So I can't say how often they're winning or losing, to be fair, but what I can see is they're on what I would suggest is the right side of a market that's rolling down. So can we use this tool? Of course we can. So once again, just run over the tool I was looking at. So it's FX SSI tools. I'll put a link on the bottom of the video here. And now there's two different ways of doing it. I've just looked at an individual currency here. You can also look at a broker's and just, I use IG's feed here quite frequently because it's quite handy. It just shows you at let me just scroll this down, a glimpse. That's what's effectively the contrarian would be selling the Aussie dollar, the gold, and the US dollar Swissy, New Zealand dollar Swissy. They'd be selling all of these because, well, that's what the trends are all doing on all of those, funny enough. The US dollar Swissy may be an example of a possible exception, we'll see, but you've got to look at what's actually happening. I would discount that one personally. I think it might be technically changing shape, and at some stage the retail market will get it right, because if they stay short long enough, or long enough, eventually they'll get it right, but they'll lose so much in the meantime. You can see the opposite side of this, where the euro yen, for example, yes, it's had a bit of a retrace over the last couple of days, but if you look at the euro yen, we bring the euro yen up and look at the big picture here. Well, that's largely been pushing up. Now the euro yen for months, I've been, as I said, with the retail, with my morning outlooks, I often rant about this, but we've been seeing it time and time. Yes, occasionally those retail traders would get it right and get on the right side, and there was opportunities to see that as it's breaking down. But in the main, it's been pushing up. That's where the money's sort of going at the moment. So why do we fight the battle? There will be times, as I said, that the battle should be fought, but you've got to be treading carefully when you're doing it. So this is, as I say, a very handy tool. You can go into lower time frames here, look at the ratios, and look at the smaller time frames if you really want. I don't think it's really necessary. You can go down here, look at the 12-hour. On the Aussie, for example, well, it shows you exactly what's happening. This is a 12-hour bar. The price is coming off here, so it's continued to sell, but the long positions are still being continually being increased. Or I say increased, but the amount of long positions with that broker is still high, and at times getting higher. So to say, it's a good tool to give you a bit of an idea. Use it, mix it up with the COT statements. As I said, I'll put a link on that, and you'll see what the different banks, different currencies should be doing. One thing with the COT, it won't give you cross pairs, so you'll have to look at what the majors are doing themselves and compare. If you've got one that's being bought and one being sold, it makes life a lot easier to get a bit of an idea. The euro's been has started to get a bit sold off a little bit, but look at the overall net holdings, massively long versus the short positions there. So there's ways that you can use the two together, one to give you the sentiment of the big money, and one to give you the sentiment of the retail market, which is only around about 6% of the general Forex market as a whole. So just bear that in mind. Okay, there we go. Hope you find this useful. If you've got any questions, do post them and I'll answer them as much as I can, and I will put the links to this site on there and the video as well, and the site, of course. I'll put the link to the FX SSI site on there as well. Okay, I'll end it there. Have a great day. Bye for now.